Good evening. This is Jackie Knight, Corporate Training Director with FTC IRA. Welcome to our educational webinar entitled Choosing Your Self-Directed Custodian or Administrator. I'm delighted to have you with me this evening. We will have Q&A at the end of the session. And before I start on the body of the information in tonight's webinar, I do want to tell you a little bit about FTC. We are a retirement plan administrator, so we do not provide legal, tax, or investment advice. We also do not represent or sell any securities or investments of any kind. We are not a registered investment advisor. We also don't represent or endorse any investment opportunities. And I may talk about some investments, but those are simply to give you an idea of the types of investments that you could participate in a self-directed account. We do recommend that you consult with your legal, tax, and investment advisors prior to making any investments. Now, this particular webinar is a little bit different from some of the others. In talking with folks, I'm often asked questions about what makes FTC different from other companies in the self-directed marketplace. And so what I did to help folks in answering those questions is I made a list of questions that you can use to do your due diligence as you are researching different companies. So I'm going to go through these different questions and this information. I'll tell you how FTC would answer those questions, and then hopefully that will give you an idea of where you should take your next step. So this webinar is going to talk about making comparisons between different types of companies. I am going to talk about investment options for self-directed accounts, the account structure that we use at FTC and why we use it. I'm going to also address partnering with other funding sources, the administrative functions that are necessary for all retirement accounts, talk a little bit about transaction guidance, transaction processing. We'll talk a little bit about company credibility and, of course, account costs. So we'll review all of these different items. Now, when you are looking at different companies, you do need to determine if you are looking at like companies or companies that may have very distinct differences. So you'll want to ask yourself, not all self-directed retirement account companies in the marketplace are the same. So you want to find out, am I comparing apples to apples or am I comparing apples to oranges? So what's in a name? When companies call themselves something, what do they mean? And so in general terms, I'll tell you what these mean. And of course, you will want to investigate with each company that you're talking to exactly what they mean by what they call themselves. The first is custodians. Now, custodians hold the assets of retirement accounts. So they hold the assets of your account. They are regulated entities, and they could be regulated by any one of several different bodies. They could be regulated by the IRS, the SEC, a state banking commissioner, or the comptroller of the currency, or the FDIC. It depends on what kind of a custodial company they are. Now, custodial companies must comply with the rules of their governing authority. And because of that compliance, that may result in specific internal policies, controls, and procedures for processing investment transactions. So they may have a variety of types of procedures to make sure that they comply with their regulatory authorities' governance. Now, depending on the complexity or the creativity of the transaction that you're trying to do in your self-directed retirement account, the time frame for approval and processing of your transaction may be lengthy and even uncertain with a custodian. They may have some restrictions on how you can use the funds in your self-directed retirement accounts, on the types of investments that you are permitted to do if they hold your account. They may not allow partnering with other funding sources. They may not allow the use of leverage on a real estate transaction. So if you are looking at a custodial company to hold your self-directed retirement account, you're going to want to ask some of those questions. Now, administrators which is what STC is. We are a full-service administrator. Administrators set up the self-directed accounts and handle the paperwork and the maintenance of the account. There's another terminology type of company, facilitators. And generally, facilitators offer consulting services and advice. Some facilitators may create an LLC for their client's account. They may offer assistance in structuring transactions. With a facilitator, you really want to find out specifically what they do and what they do not do for their clients. There are some companies that simply label themselves setup companies. They may just set up the self-directed account structure, could be with or without an investing LLC, which I will talk a little bit more about later. And generally, they offer no administrative and no maintenance services. Now, with STC, I said we are an administrator, and we, of course, do use a custodian. We are a full-service administrator, and by that I mean we do handle all of the back-office support for your account. So we go, I will describe that in more detail, but we fulfill all of the administrative functions. We are a full-service administrator. So really, the bottom line here is that when you are looking at different companies, regardless of what they call themselves, you want to check into what they offer and what they don't offer so that you'll be sure that you're getting a company that will provide the services that you need. Now let's talk a little bit about investment options. And you will want to ask each company, do they permit all allowable asset types? And when I say allowable, I mean everything that's allowable by law, not simply what they permit to be held in the accounts that they maintain or administer. So anything that's permitted by law. And there is a wide variety of investments that are permitted into retirement accounts. I brought out onto your screen a list of real estate retirement account investments, single and multifamily homes, vacation investment property, tax liens, raw land, building lots, commercial buildings, real estate syndications, where a group of investors get together, form a syndication, and co-invest in some type of real estate investment. Mortgages, loans, notes. You can actually own a your retirement account can own a real estate-backed mortgage. You can make loans from your retirement account. You can purchase notes. Precious metals can also be owned in retirement accounts. They do need to meet certain requirements set by the IRS, but certainly precious metal investments are permitted in retirement accounts. Business ownership, you can own part of a business or all of a business. Foreign currency, options, futures, commodities, these are all permissible assets in a retirement account. But I will say that not all self-directed companies permit all of them. Stocks, bonds, and mutual funds. Of course, we hear mostly about these types of investments in retirement accounts. So what you will want to find out from any company that you are looking at is, do they permit all investments? Do they permit the type of investments that I want to do? With STC, we allow all permissible investment holdings. We have no restrictions on investment type. Now, I mentioned leverage just a little bit earlier, but this is really key, especially if you are interested in investing in real estate or you are a real estate investor. You will want to find out if the company that you propose to work with allows you to leverage an asset's purchase, meaning can your retirement account get a loan to purchase a property that it holds? Now, with all retirement accounts, this is certainly permissible, but it must be a particular type of loan. It cannot be a personally guaranteed loan. It must be a non-recourse loan. And by that term means non-recourse. It means that the lender, should there be a default on the loan, only has recourse to the property that the loan is on. So the lender cannot go to any other assets in your retirement account, cannot go to your personal assets. The only recourse they have is the property that the loan is on. So it's called a non-recourse loan. There are a number of lenders out there now who do make loans to retirement accounts so you can leverage your real estate purchase. They are a little bit more like a commercial loan, so they're going to have a larger down payment. They're going to have some restrictions that a personally guaranteed loan wouldn't have. But certainly leverage is permissible in a retirement account. You will want to find out if the company you propose to work with permits leveraged real estate purchases. FTC does. I want to talk now a little bit about the retirement account structure. You will want to find out what kind of structure the company that you are looking at considers. I will tell you that with FTC, we create an LLC for each client account. That LLC becomes the investing entity for your retirement account. Now, it is not a requirement, but it does have some very significant benefits to having that structure in a self-directed account. So let me tell you a little bit about the benefits of having an LLC structure. It offers you maximum flexibility. Now, by that I mean, if you want to do a structure where you have a transaction where you have multiple parties, or perhaps you are going to get leverage to purchase a property, using an LLC makes that transaction simpler, more straightforward. So it does give you flexibility in a number of different ways in structuring complex transactions. It does also provide an additional layer of asset protection because it is a limited liability company. Although I will mention that it is a very specific LLC. It is one that is designed to be owned by a retirement account. So our attorneys and our accountants have created this particular type of LLC's operating agreement and articles of incorporation so that it complies with the IRS and other governing authorities' rules related to retirement accounts. So it's a very specific type of LLC. It's not a generic business LLC, but it is one that is designed to be owned by a retirement account. Using this LLC structure gives you, the account owner, checkbook control over your retirement funds. You get immediate response to investment opportunities. Now, we know good investments can come and go very quickly, and sometimes you really need to be able to move on them. So with this type of a setup, we can same day or next day fund your transaction. Now, what I want you to notice about this, because this is specific to FTC, you'll see I have checkbook control in quotes. We do not give our clients the checkbook for their retirement account. Some companies do. We do not. And we do not really for your protection. We don't want our clients to engage in a prohibited transaction, and you could do that unknowingly if you had the checkbook. There are penalties for engaging in prohibited transactions. There are some things that you may not do in a retirement account. The penalties can be high, up to forfeiting your entire retirement account. So what we do is we review your transaction. You email or fax the information to us. Our client services department reviews the transaction immediately, and we can, same day, if everything is in line, we don't see any problems with violations of the rules, we can fund that transaction the same day if we receive those documents by 2 p.m. Eastern Time, or next business day if it's after that. So you really have quick access to your funds. You can get an investment funded quickly, but you also have the protection of experts looking over your transaction and making sure that, you know, all the I's are dotted and all the T's are crossed, so you won't get yourself in trouble. Also, this LLC structure simplifies asset titling. For example, if you were to go to purchase a piece of real estate, that property would be titled in your LLC's name, and the seller would never know that it was a retirement account purchasing the property. It would be titled in the LLC's name. So it does simplify asset titling, and of course, titling transfer title as well. And another benefit of this is it makes it straightforward to pool or partner with other funding sources. And we have many clients come to us who want to do that very thing. They have either personal money or a spouse's retirement account or a colleague investor, and they'd like to partner in a purchase that involves their retirement account. So let's talk a little bit more about partnering, pooling of funds. I will say I did mention that FTC does set up that LLC to give you all of those advantages, and we do make it possible for you to partner and pool funds with others. This is a question you would want to ask any company that you're considering. Can I co-invest my retirement funds with other funding sources? And here are some of who those sources might be. Colleagues, LLCs, could be investment syndications. And now I'm going to bring out onto your screen 3 parties that would normally be considered disqualified persons to your retirement account. If you know anything about the IRS rules, you know that there are some people, some parties, that your retirement account may not do a direct transaction with. And that's you, your spouse, your ascendants, parents on up the line, and your descendants, children on down the line. However, if you structure the transaction properly, at the inception of the transaction, your retirement account can partner with your personal funds, your spouse, those family, otherwise disqualified family members. So using the LLC makes this partnering or pooling with other parties to co-own an asset very straightforward, much simpler. And because you can do this partnering, that means your retirement account does not have to have all the funds to fully fund an investment. You could invest in something that you have insufficient funds to do on your own. So it might give you the opportunity to diversify into assets that otherwise you couldn't participate in those investments just by partnering. So let's just take a little bit of a time to look at our structure so you understand how this works, and because that is oftentimes important to people who come to work with us. In this structure schematic, you see in the upper left, current custodian. So this would be where you currently have your account. And you'll see on the right-hand upper, our self-directed custodian. So you would, setting up an account with us, you would direct your current custodian to transfer or roll over funds to our custodian. And we would set up this retirement plan LLC in the state of your choice. Once the monies were received by our custodian and the LLC setup was complete, then the custodian would purchase the ownership of the LLC with all of the funds in your account. And your monies would move to a bank account that your LLC now has access to. And now you're ready to begin investing. And you can see in this example, you have your retirement account wholly owns investment number 1 and number 2. Number 3, however, has 4 owners. Your retirement account is one of the 4, your father, your daughter, and some of your personal money. This is permitted if you are co-investors at the inception of the transaction. Otherwise, these are all disqualified persons, and a direct transaction between you and them would be prohibited. But if you co-invest at the inception of the purchase transaction, this is permissible. So we help our clients make sure, if they want to do this type of transaction, that it is structured properly so that it does comply with the rules. So just something to think about if you were unaware that you could do this kind of thing. It is possible as long as it is structured properly, and we can help our clients do that. So that is why we use the LLC structure. Those are some of the reasons. So you may want to consider, if you have a need for an LLC, you'll want to be sure that the company you're looking at offers that. Now, administrative functions must be fulfilled for all retirement accounts, and you're going to want to ask the company if they fulfill all of those requirements and if they file all of the required reports, because if they don't, you will need to do it. An annual valuation needs to be done each year and reported to the IRS. Books and records of all your assets, all of the purchases, all of the earnings, any expenditures, all of those must be maintained in detail. State filings may be necessary depending on where you live. So you want to be sure that whomever you work with handles all of those things. If you have an LLC set up, you will also want to find out what kind of statements or documents you get for that LLC. You will need to have those available. Now, I will tell you that STC is a full-service administrator, so we fulfill all of these functions. We also give you quarterly financial statements for the LLC that we complete, and you will get online financial statements, and you will have a cash flow statement that is updated daily. So at all times, you can go online to a secure site, and you can look at your retirement account and see all of the data that you need. So back to the what's in a name, what companies call themselves, some facilitators and some setup companies offer no administration at all. So you have to maintain those accurate books and send the annual valuations to the IRS on your own. So you want to be prepared to do that if you are working with that kind of a company. With STC, we will take care of all this back office paperwork, administrative support, to really let you go out and focus on finding the investments that you want in your retirement account. Let's talk a little bit now about transaction structure and getting guidance. You will want to ask yourself, am I well versed in the IRS and the ERISA regulations? Do I understand what's allowed and what's not allowed? Because there are certainly things that are not permitted, and you want to be very cautious and careful about not violating those rules, because there are penalties. Again, they can be severe. So there are some assets that are allowed, and there are some that are not. There are some transactions that are prohibited. There's a list of them. There are disqualified parties that I talked about earlier. So you want to ask yourself, do I have sufficient knowledge and expertise to be able to be sure that I'm not violating any of these rules, or do I need a company that will help me? Ask if the company will educate you at no additional cost, including one-on-one calls. Will they talk to you personally and answer your questions? If they do, if they will, how much is it going to cost you? Now, from STC's vantage point, we are experts in the rules and regulations. We will help you be sure that your transaction complies with the law. We will talk with you as much as need be. With that, we strongly encourage our clients to send the details of their transactions to us in advance so that we can review them and make sure that there isn't anything that needs to be changed or fixed or won't work. Giving time to make those modifications if necessary. And there is no extra charge for that. You can call us or email us as much as you need to. That is one of our primary purposes, is to service you, give you the service you need so that you can make these transactions. So no extra charge, no hourly fees for calling our client services department as much as you need. You will also want to find out if the company has experts to review your transactions for adherence to IRS and ERISA rules. Will they offer you assistance in structuring complex or unusual transactions? Do they have experts available to talk with your advisors regarding transactions? We do have a client service department that's devoted to all these functions. We do have expert attorneys and accountants to review complex issues, and there is no additional cost for these services. I know of at least one instance where a client asked us if we would talk to their bank. The bank didn't understand some of the nuances of non-recourse loans, and so we did that. There was no fee to the client for that. Somebody at our corporate office talked with their banker. They had a three-way conversation and meeting. So we are open to doing that kind of assistance for our clients. When you are comparing companies, you want to ask about the transaction processing and how that works and how long it takes. What is the transaction approval process? Is my transaction reviewed and approved within 24 hours? Is the review approval time frame dependent on the complexity of the transaction? If I'm doing something really complex, if I've got a bank lending me money and I've got multiple parties to this, is that going to slow down the approval time at this company because they're not that familiar with this, or they have to do a lot of research into this type of a transaction? So you want to find that out. What is the turnaround time to fund my investment? In real estate transactions, who signs the transaction documents? The account owner or the custodian? Now that can be important to you because if you are a real estate investor and you want to invest in real estate and you're working with a company that you have to send the closing documents to, and they go on somebody's desk who needs to review them, and then they go to somebody else who reviews number 2, and then they go to somebody else who signs off, you know, that could take a little bit of time there, and it might be a while before you get those closing documents. So these are some questions that are important to know the answers to depending on the type of transactions you're doing. So I will tell you from STC's point of view, we know good transactions come and go very quickly. You need to be able to get your investments funded quickly, but you also want the protection of an expert reviewing those transactions. So you can call our client services in advance to review your transactions. We can usually same day fund an investment if we get all of the information by 2 o'clock p.m. Eastern Time. So we review as soon as we get the transaction, and you can fax that to us, you can email that to us. Transactions are reviewed immediately. There's no waiting time. And what we will do is if we see a potential problem, we will call you immediately so that we can get that worked out so that you can get your investment funded as quickly as possible. With real estate transactions, you, the account owner, would go to closing and you would sign on behalf of your retirement account. So you don't have to send the documents to STC for somebody to review and sign off. What you would do is you would send the documents to our client services department before going to closing. We would review them, and then we would give you the check, and you would go to closing and sign the documents. So we make that as straightforward as possible for real estate investors. You will want to check into the company for the safety of your retirement assets. Company credibility, how long have they been around? Have they had any lawsuits? Have they had any Better Business Bureau complaints? Is the company insured? Are your funds held in a commercial bank? Oh, excuse me, let me go back. So with SEC, I will tell you that you can go to our website and you can read lots of client testimonials about our work with them and what they have said about us. We do use, of course, a custodian. Our custodian is Main Star Trust in Onega, Kansas. We have been using them since the beginning of our company. Your funds are held, any cash funds that you have in your account are held in a bank in Hagerstown, Maryland. That's where we're headquartered. The funds are in Middletown Valley Bank, so you know exactly where your money is. STC was formed in 2004. Our principal has extensive experience self-directing his own retirement accounts. We have expert attorneys and accountants on staff. Our whole focus is a very personalized service to a very diversified client base of active investors. So you are welcome to visit our headquarters or call our corporate office if you have any particular questions. As I said at the very beginning, now we are a full service administrator, so we aren't a law office, we aren't a CPA office, so we can't answer those kinds of questions, but we can help you with anything administratively related to your account. We haven't had any Better Business Bureau complaints. You know, you always want to go out and check that on companies that you're considering working with. So do think about the company credibility as well. And now let's look at, this is usually the first question people ask me, how much does it cost? What you really want to consider, and absolutely cost is important, but you want to consider what are the expenses associated with my account and what kinds of services and assistance am I going to need and how much is that going to cost me. So what are the expenses associated with the account? Consider both the quality and the quantity of services. So you want to think about cheap assistance always best. I'll just say that. You want to think about the quality of the services that you're going to get as well, not just how much you might pay for them. So here are some individual questions that you can ask of companies. Are there individual transaction fees? What are the various transaction fees, if so? Are there custodial fees? Are there hourly fees to consult and ask questions? Are there fees to open and close the account? Are there administrative management fees? What other costs are associated with the account? And then once you get that general information, you will probably want to ask, what is the cost estimate for my account and the transactions that I anticipate doing in my account? Now with STC, we have no custodial fee, no transaction fees, no fees for Roth conversions, no additional fees for consolidating multiple accounts. What we do have is an initial one-time setup fee for that specialized LLC I told you about. Generally, that's $2,000. And then we have a wrapped management fee, which is 0.245% per quarter. So it's less than 0.25% per quarter. And we do cap our fees. Once your account value reaches, it's about $400,000, your fees do not go up. They maintain level. And so we don't have individual transaction fees and custodial fees and hourly fees to consult. So those are kinds of things that you want to find out what those costs can be, because sometimes there are hidden costs or costs that you were unaware of that you encounter as you transact business. Those are the primary questions that I think will help you do your due diligence in looking at different companies. So I would ask now, how can we serve you? You may want to open a self-directed account now. That would be great. We can help you with that. You may have clients or colleagues who would be interested in self-direction, or you may need more information. If any of those is the case, please do get in touch with us. You can contact your STC representative. If you don't know who that is, you can contact me. My contact information is on our website, and you can email me directly or give me a call. Please do visit our website, stcira.com, and our corporate phone number is on the screen for you as well. So please do get in touch with us. We would like to answer any questions you may have and see if we can be of assistance to you in your self-directed account investing. That is the information I had to share. If you will give me a moment to open up my question box, and we'll see if anybody has typed any questions for me. And I do have a few questions, so give me just a moment. I'm going to expand my box so I can see these clearly. Okay. I have a few here. I'm just glancing through them to see if there is a big difference in any of them, or if many of them are this similar. Okay. Okay, the first one is, what is the time frame to get my account up and running with STC? We typically ask for 4 to 6 weeks from the time that we receive the original paperwork to get your account set up complete. Now, the reason for that extended time frame is that we need to create the LLC in the state of your choice, so we're somewhat dependent on that that department in the state's government to move that along, and the custodial transfer from your current custodian to our custodian, and then the monies from our custodian to your LLC's bank account once that's set up. So that takes a little bit of time. We work very hard to expedite that process. It may be much less time than 4 to 6 weeks, but we do ask you to give us several weeks to get all these pieces together. Once your account setup is complete, I will tell you that you get a binder from us that will have all of your documents, all of your instructions. At that point, you can get that same day or next business day funding. Everything is in place, so we're ready to receive your investment transaction documents and begin funding your investment. So it's just this initial setup time period that takes a little bit of time, but after that, then it's that real quick turnaround. Okay. I want to start investing in real estate, but I don't have enough in my IRA to buy a property outright. Do I have any other options? Well, you could always do the partnering that I mentioned with another individual that has funds, so then you could co-own that. They can't be disqualified persons unless we structure that properly. You remember I talked about pooling at the inception of the purchase. You could also consider borrowing funds. You could consider getting a non-recourse loan that I mentioned. Those are kind of your only two options. Anything else, like you could invest in tax things. You could invest in a different type of real estate transaction, like a tax lien. And in some states, those are produce a very high income interest rate. So you could invest in a tax lien potentially, and those are foreclosable liens. So if the lien isn't repaid, then your retirement account would foreclose and own that property. That'd be one way to get property into your IRA. You can also make loans to others. It's not exactly the same as owning the real estate, but you could make a loan to someone, and the property, maybe it's a loan to them to purchase a property, maybe they're going to rehab it, sell it, and you could make the property collateral for that loan. So there's some ways that you could do that, but purchasing outright, you probably either need to pool with somebody else or get a loan if you have insufficient funds. Oh, my state has a high annual LLC fee. Can I use a different state? Yes, you can use any state. You don't have to necessarily live in the state that your LLC is incorporated in for your retirement account. We do have a registered agent company that we can use that would assign you a street address in the state you'd like to establish that LLC in. If you don't have your own registered agent. I do need to mention there is an additional fee for this registered agent if you want to go that route. If the LLC is in the state where you live, then your residential address becomes the address for the LLC. This question relates to making a loan. Does FTC choose the terms of my loans? No, we don't. This is truly self-direction, so you will choose the terms of your loans. We will simply make you aware if any of your terms are items that might raise a red flag with the IRS in an audit. Let me give you an example because I have been asked this question. If you were loaning funds to someone for 5 years at a 1% interest rate, that would be highly suspicious. That would probably raise a red flag. So we would let you know that that would probably raise a red flag with the IRS. We would not tell you that you had to change it, but we would let you know that that could be potentially a problem, and you might want to reconsider that because nobody could get that kind of a rate if they went out somewhere else. So it kind of needs to be an arm's length transaction. We'll simply inform you that such terms like that might be placing your IRA at risk. Okay, How does one take RMD from real estate holdings? Okay, first let me tell you what RMD is in case you aren't aware. That's a required minimum distribution. Once you reach age 70 and a half, in certain types of accounts, you must begin taking required minimum distributions. And if you own a piece of property in your account, you may not want to liquidate that property. You might not want to sell it and in order to take that distribution. Well, a distribution does not have to be in cash. So what you can do in a case like that is you could have that property, it has to be appraised, and then you would distribute a portion of the ownership of the property to yourself personally. And that would require, so whatever the RMD was that you needed to take, that amount of the value of the property would be distributed to you personally. The property would need to be retitled, and it would need to be retitled in the name of your retirement account and you personally in the proper ownership proportion. And then any earnings or expenditures on that account would need to be paid by the two co-owners in their pro rata share ownership. So it certainly can be done. We know people who do it. You do not have to necessarily liquidate the property, but it would need to be appraised, the distribution amount, retitled, proportionate ownership. I'm trying to see if I understand what this question is. Can you divide retirement plans into several LLCs that properties may be in different states? With STC, we create one LLC for a retirement plan. Now, if there were, this is kind of an operational question, so I think there is the possibility that you could have multiple accounts and each account would have its own LLC, but there would be an expense for each of those LLCs and that piece of the account. But I know people have multiple IRA accounts with different companies, so there is a potential to have multiple IRA accounts and multiple LLCs. It would be a definite expense to do that. So the person asking that question, if we need to talk more details on that, we can do that. And this is kind of an administrative question. We'll talk about that. Okay, let's, does a loan I make from my IRA have to be secured? No, actually it does not have to be secured. There is no IRS requirement for that. I would say, though, that your investment is more protected if it's secured. If the borrower doesn't repay, if you have security, then you have something to go to for repayment of that note. But it is not a requirement. If you want to have your note secured, your loan secured, you do want to be sure that that collateral is listed in the note and that the lien is recorded on the property. So that is a step that you would want to make. And if you were doing something like that, our client services department can talk with you about that and what that means you would need to do. Do I have to pay taxes on the income that is generated by my IRA? Normally, no. The answer is generally no. Retirement account earnings are tax deferred, and if it's a Roth account, they're actually tax-free because generally, because when you take distributions after the 60-month period, those distributions are not taxable. So normally the answer is no. There are some exceptions. If you use a non-recourse loan to purchase property, then you may have to pay unrelated business income tax on a portion of the income based on the amount of leverage on the property. That's kind of a complicated answer. It's actually UDFI, unrelated debt financed income, which is a subset of UBIT, unrelated business income tax. I do a webinar. I have a previously recorded webinar on our website that addresses this in a little bit of detail, but I do want you to be aware that if you are a real estate investor and you do use leverage, there is the potential for some tax consequence to your retirement account. Now, that doesn't mean that you don't want to do the investment necessarily. You would want to do an evaluation of, are the earnings on this investment, sufficient, good enough that I still want to do it even though my retirement account might need to pay taxes. So I do have a detailed example of that and definition of that in that previously recorded webinar. You can find that on our website, ftcira.com. Okay, looking at my time, I'm going to take just one more question. Actually, okay, another one came in. I'll do these two. If I am considering a Roth conversion, should I do that prior to transferring or rolling the funds over to you? If so, are there additional fees associated with the conversion? First, let me mention, in case people aren't familiar with a Roth conversion, what that would mean would be you would be taking monies from another account, let's say a traditional IRA, and converting them into a Roth account. Now, the reason that you would do that is a Roth and a traditional are two very different types of accounts in that contributions to traditional IRAs are pre-tax, they're not taxed, but when you take distributions from a traditional IRA, then those distributions are taxed. A Roth is the opposite of that. Well, it's different than that. Contributions to a Roth account are post-tax. You do pay taxes on them in the year you make the contribution. However, everything that is earned in a Roth account is not just tax deferred. When you begin taking qualified distributions after reaching retirement age from a Roth account, those distributions are not taxed. Now, there are some people who have been contributing to a traditional IRA, and they now understand that tax-free earning opportunity in a Roth account, and they want to convert those monies to a Roth account. So that's called a Roth conversion. When you do that, there are tax consequences because you're moving money that was never taxed into and putting it into an account that accepts post-tax contributions. So there will be a tax consequence. I just want you to know that up front of a Roth conversion. It doesn't matter to STC if you convert before you move your money to us or after. What I can tell you is that we don't charge anything to do a Roth conversion. So if the company that you're currently working with does, then you might want to move to us first and then do the conversion with us. So that's really up to you. It doesn't make any difference to us. And then I have a last question. I would like to tell my CPA more about your services. Do you work with these types of individuals to set up accounts? Yes, we can do that. We certainly can do that. We have a variety of collaborative business arrangements that are available to CPAs, realtors, financial advisors. So our Chief Operating Officer, who is Mick Hirsch, would be happy to talk with anybody about that. So please do call our corporate office and check out our website, and his contact information is there as well, and we would be happy to discuss that with you. So folks, I have finished with my time. I do want to tell you that we have an interesting webinar scheduled for next month. That will be February, and the date is February 7th. And I'm going to be focusing on some basic information, but then we're going to be sort of delving into real estate investing in a self-directed account. So we'll go over some detailed information about that, and I hope you will be able to join us. You will be able to register on our website, and if you received an email invitation to this webinar, you will get one to that as well. I would like to thank you all for coming. Please, if more questions come to mind or you need to speak to me personally, please do that. Get in touch. I will be happy to discuss anything that might help you make decisions about your self-directed retirement account. Thank you so much. Everybody have a great evening. Good night.